What's happening, traders? Coming at you live from Brimley in the gorgeous Upper Peninsula of Michigan and streaming across the planet. This is Shane with Futures IO. Thank you for joining us for our 433rd webinar event. Futures IO is a trading community that is dedicated to transparency and bringing you quality education with webinars such as this. The basic membership's free. Our YouTube channel has over 400 trading videos. It's a great resource, all free to the public. Check it out, subscribe for all the latest updates, and do us a big favor by hitting a few like buttons while you're there. And you can find us on Facebook and follow us on Twitter for daily trading insights at Futures IO. All righty, folks, let's get this show on the road. Have you ever wondered what goes through the head of a prop trader? How might they view the market differently than we do? What tools do they use? Today, we're going to find out. Chris Gray of Earn to Trade is here with us, and we're going to be performing open brain surgery in order to extract these answers and more. Provided he survives, there's going to be a Q&A session afterwards. You can click on the Q&A button on your Zoom control panel and type in your questions there. If we don't get to yours, it'll be posted over at Futures IO in the webinar thread. As always, the event's being recorded and it'll be posted at Futures IO and YouTube within 48 hours. And now, without any further delay, please join me in welcoming Chris Gray. Chris, how's it going, man?
It's going well. Thanks, Shane, for having us back again. I like that introduction. Hopefully the the brain surgery won't be too painful.
We can skip it. I put the instruments away. You can just go ahead and do what you're supposed to do. I'm see we're still using the same barber.
Yeah, that's right. That is right, indeed. It's going to hurt my heart a little bit to acknowledge
it makes it easier to mark the line.
Exactly. Aerodynamics, right? Aerodynamics. One less thing to think about. And that is how I'm going to cut my hair. I don't have to do that anymore. Am I going to get the side fade? Am I going to, yeah, one less thing.
Yeah, right on, man. All right. So if you're ready to take it, man, she's ready to go here.
All right, let me go ahead and pull the screen share over. All right. Welcome, everybody, by the way. So I'm not just talking to Shane. It's a pleasure having you all back again because you are here to listen to what I have to say. And I respect that and appreciate that. And that's not sarcasm. And I'm very sarcastic, so it's important that I enunciate the difference there. Let's see. All right, share screen. All right, I'm taking it away. All right, we got screen share up.
Yeah, looking good, man.
Excellent, good stuff. So once again, though, in all seriousness, though, let's get down to business, everybody. Thank you for joining us. I do appreciate it, as always. So my goal with today's discussion was really to just bring you guys a transparent look into what goes through, at least what goes through my head. I'm not going to speak for anyone else, but maybe some of you out there will be able to relate to this. But what goes through my mind and what are the processes that I take on a daily basis as I get going? And maybe after our discussion today, you'll feel a little bit more confident that you can achieve the goal of becoming a funded trader, or maybe you'll decide that you don't want to become a funded trader because you're like, that bald guy, he's pretty weird. So either way you go about this, my goal is to give you what I can contribute and let you do with it what you will. Those of you that have been with us in the past or attended some of these presentations we've done here at Futures IO, that I can be a little quirky at times. I can be a little silly at times, but I like to be very real, and that's one of the kind of my cornerstones I like to keep. So this is a subject that I thought fit that. And to start us off with, we're going to begin naturally at the beginning. And the first thing that I do when we start off the trading week, which for some people is on Sunday, and ultimately, if you're one of the traders that wants to get going on Sunday, by all means, be my guest. I try in my old age to avoid getting too involved on Sunday, but I am okay. I'll put my stamp of approval on taking a look at, maybe 6, 7 p.m. my time, Eastern time, taking a look at what's going on in the market before we actually get rocking and rolling for the week and try to get my pre-planning phase out of the way on Sunday. But if you want to do this early in the morning, on Monday morning, by all means, it's not going to make a lick of difference. So in order to do this, let's go ahead and switch on over here to, we're going to switch on over to the charts and talk about what the pre-planning phase for me means. The very first thing I like to do in my pre-planning phase before I begin my trading week is begin by marking off or checking my levels, checking whatever areas I need to be aware of on the macro time frame, and all the way down realistically throughout the trading week I will be going into those micro time frames. But I like to mark off those macro levels and get an idea of where they at. Has anything changed? Have we moved above any levels, or any, maybe a monthly level, maybe a weekly level, something that I've drawn maybe last week, maybe 2 weeks ago, 3 weeks ago. So this is the very first thing that I do before everything else, is go to my charts, whether it's Sunday night, early Monday morning, and start off by marking off my levels. So that's what we're going to do. And I'm going to do this right here live in front of you, because what's more interactive than that. So right now I've got the E-mini S&P 500, and it's currently on a weekly chart. I'm not going to have, you're not going to spend too much time on the levels aspect, because what defines a level to you may be different to me. But I will share with you what I'm looking for when I mark off my levels before the week gets going. I'm looking for the areas that allowed the market to do something significant. And at first you might be thinking, well, duh. But what I mean by that is allowed it to get somewhere significant, more so than paying attention to the area itself that many people view as significant. That's my personal taste. So that's what I have to contribute today. And the way that looks is drawing tools come out, horizontal line comes out, and then I'm going to start by taking a look at what candlestick we're currently encapsulated in. Where are we currently sitting? So right now on a weekly chart, we know that we're obviously sitting inside this big, beautiful bullish candle that, resisted the urge to dump off on us earlier on. So I want to get an idea of where the high and the low is. So I'm going to mark off the high, and I'm going to mark off the low. Okay. I'm going to mark off the high and the low of whatever candlestick we're currently contained in. And a cool trick to make this a little bit easier on your brain, depending on what trading platform you're using, is just color code your lines for what they represent. That could mean we are going to color code your weekly lines red. We're going to color code the 12-hour lines green, or so on and so forth. Or you can use the text tool and write off. For the sake of simplicity, this is how we begin. We mark off the high and the low that is currently encapsulating the most recent candlestick in which price has been trading in. We're contained in this candlestick. Now, here's a valid question that I'm sure some of you are probably already wondering. What if this bearish candle before me was higher? Okay, maybe the all-time high wasn't in this candle, is in the one just before it. Well, then I'm going to mark off that one. Okay, the reason why I marked off the high and the low is because it's the most relative as far as the 12 or the weekly chart goes, the most recent high and low that I have for a swing high, swing low. I want to be aware of where those lines are, because a lot of times we get some action, whatever it is we're looking to break either of those swings. Whether it's the all-time high, then you better believe we're going to expect some kind of action, or it's just simply a swing low in this case where we're, on the precarious edge. So now that I've got that marked off, I don't need to over concern myself, because once again, we're on the weekly chart, guys. How much movement do we actually expect throughout the week? Well, obviously that's going to be a case by case basis, but it we can take a look at the charts and say, all right, it's not likely that we're going to end up anywhere down here. We're not going to be down by the 3600s, at least I hope not. It's just not likely based on the average volatility and what's going on with the market at this point in time. So we don't care. But what I might do is, if I notice that there's another substantial area on the weekly that I want to make sure I don't miss, I'm going to go ahead and mark that off as well. So perhaps the area around, let's call it 4120. This is an area that is significant to me. And why is it significant? It's because support needed to be held here in order for us to work our way up here and set that all-time high. That's something important to me. That's something that I care about. So I mark it off. But beyond that, there's nothing higher. We're sitting at these all-time highs right now. We're encapsulated with recent price action around this area. My work here is done. So the next thing I want to do is go ahead and switch on over to the daily chart and take a look at what we've got here. Now on the daily chart, things are going to start to look a little bit different. And you'll, once you're going through this yourself, guys, don't worry, you'll get going quick at it. As I look at the daily chart, we're going to see a different story, because once again, it's daily candles versus weekly candles. And we're going to see if there's anything immediately or around price that I expect to be encountered throughout this weekly process. Now, realistically, we're probably going to be contained or trading around wherever we marked off the high and the low of the current candle, unless we go to push new highs, obviously. Because we have all that bullish momentum, we might be pushing high. So I'll be prepared for continuous new highs to be set. But as far as these support areas, because they're so far away, relatively speaking, I'm not overly concerned about them. So when we get way down here, once again, same logic applies. What we want to pay attention to is what has happened that has caused a certain event that was significant in the market. And the daily chart tells us something a little bit different that we weren't able to see on the weekly chart. So now I'm going to go ahead and change the color of my line. And I'm going to come up with, let's go with a gold line here. Let's go with a goldenrod line. What I want to pay attention to here now is where we found this open close of this big bearish candle where support was found that allowed us to reach what was at a point in time an all-time high. Because of that, this is an area around this 4,300 mark, which we all know most likely is a strong psychological number due to all of those zeros. That's something that we want to pay attention to. So for that reason, and the fact that we actually showed support off of this after dipping below it, this is an area that my weekly charts didn't show me that the daily charts did. So I'm going to mark that one off as well. And then also, now that we have a more refined view and we're not particularly looking at the weekly chart, we can start to adjust here if needed. We can adjust our weekly line if needed to push it a little bit higher because our weekly top showed at 44.10, and realistically we see that we have an open close around 44.17. So instead of just drawing a second line and muddying up my charts, what I might do is just adjust a little bit higher. So now that my weekly line, if it wants to move for me, my weekly line and my daily lines now agree. I've got a marked off area that allowed, this is support that was gained in order to go set a new high. Even though we've set a new high beyond this point, this is an area that allowed the market to do something substantial, and it's close enough, relatively speaking, to where price is currently trading that if we come back around this area, I want to be aware of it. So this is all part of the pre-planning phase. And with, once again, we could talk for this kind of stuff for hours. So I'm going to kind of speed up here so we can move through this and get into some of the other stuff. But without skipping anything, some other things that I might want to pay attention to would be this area right here. And the reason behind this, let me make that guy orange or goldenrod, whatever color we decided to call it. There we are. There we go. So what we've got here is the high that failed. This is the high that failed that allowed the market to go and crash. This has allowed the market to go and set a new low. This is a new swing low that occurred that allowed us to reach down towards this weekly level. That is a lower low than the previous swing low that we saw right here. So to me, this is also an area of significance, not only due to the fact that it was a high, but more so due to the fact that it gave the market the resistance it needed, the weight that it needed to have this exaggerated swing. So on my daily chart, I'm pretty satisfied marking off these two areas and moving to the next adjacent time frame lower. Now, which adjacent time frame lower is going to be a bit of a nitpicky thing. If you want to go down every single option that your trading platform has, you're going to end up with a lot more work than necessarily is needed. So what I like to do is I go weekly, daily, then I'll take a look at the 12 or 8 hour. Beyond that, I skip to 4. I'm never looking at the 6, I'm never looking at the 3, and I'm never looking at the 2. Those are all time frames I just throw out entirely. So let's switch to the 12 hour, and oftentimes the daily and the 12 hour really agree with each other, so you don't really have to do too much here. But what happens here is I'm going to go ahead and take a look and see what we've got going on. Does anything stand out? Are there any areas of significance that I need to be aware of as I work throughout my trading week? Well, as I take a look at the 12 hours, everything looks to be pretty solid, but there is something that actually is standing out here to me that I want to mark off. And I'm going to do that with a bit of a lighter yellow because that's just another way to segregate the lines here. At this 4250 location, we had a little bit of support built recently when we V-bottomed, but we also had resistance in the past, as you can see over here. And this is all relatively recent enough that I want to pay attention to this. Now, I'm not going to draw as much weight to this as perhaps my weekly levels or my daily levels, but it's still up there. It's a 12-hour chart. It's a substantial support. I want to be aware of it. I don't want to be trading around 4250 and have a short open at, say, 4280, not be aware of that and just get mollywopped once we, bing on down on it. So as such, this will allow me to just be aware that, hey, go back up to the daily, remember why you mark that off before you got going, before you began your whole trading plan, before you justified any of your positions to begin with. So I mark that off. Everything else I already agree with here. There's nothing too substantial that I feel I want to add. So now we're going to jump down lower. Once again, 8 hours. Apparently Siri is listening to us. That is spooky. Anyway, so we're going to continue on down now to the 4-hour chart, and hopefully Siri is recording all this. And if that's the case, then hey, what do we need Zoom for anyway? So as far as the 4-hour chart, I'm going to switch on down to the 4-hour chart just specifically because the 8 and the 12 are going to be similar. I only know that because I already looked and I'm saving you guys the time. So with the 4-hour chart, this is where we might start to see a little bit more of that micro view. We're starting to get into some more swing lows that aren't visible on the higher time frame. And once again, just simply going to color code them or mark them off as needed, however it is that makes it easy for your brain. There's no right or wrong way to do this, guys. It's what allows your brain to interpret that information in a way that's efficient and is likely to cause the least amount of errors. That's really what we're trying to do. Remove the excess noise, allow us to get to the information we need in the most efficient way possible, and make as few mistakes along the way. That's really what trading's all about. So now that we're on the 4-hour chart, let's switch our color on over. Let's go ahead and switch on over. Let's go to this orangey color. It's we'll just leave it at that. No jokes for that one here that are PG-13 appropriate. So with this orangey color here, we're going to go ahead and see that we have some areas that I definitely am going to pay attention to. The first thing that I draw my attention to is this large rally that we had when we broke above the 4,300 in the past. This is an area that we back tested, gained support on, as you can see over here, hopefully on the left side of the screen, binged our way up off of it, gained some strength, and hit a hard wall right around 4,350, give or take. 4,350 was interesting. We were able to leap above it before falling below it, stop running. Probably some of you that are here, I had a little bit of trouble around the swing myself, but nonetheless, this is an area that had a lot of interesting action. And then as the market progressed, we continued to find support around this location. And it was a bit of a muddy location. It was never exactly at 4,350. It was never exactly at, say 43.45 or what have you, but it was around the location. And because we had a lot of action around this area, it was a magnetized zone, if you will. I want to make sure that I'm aware I'm approaching this level. So simply due to the fact that I'm marking this off does not mean that Chris is going to go ahead and take a support bounce off of this, or I'm looking for a support break and I'm going to go ahead and ride that bearish momentum down. Instead, what this means to me is I'm going to go ahead and be aware that there was something significant that happened here as I go throughout my trading week. If we approach an orange line, I know that that was a 4-hour line and something substantial happened there. All I have to do is switch my charts back to 4-hour. If I don't see it on the smaller time frames, or if I don't see it on the larger time frames, go down to 4 hours. I'm going to mark that off. And then there's one more area here that I actually want to pay attention to. And that is going to be this little hiccup right here. And this is the first chart that allowed us to really see this. And this is a sweet spot for me, right around this 4,400 or so, actually 4,405, I stand corrected. Around 4,405, we found resistance while working our way up and actually setting an all-time high initially. Then we fell off of it, gained support back at our 43.80 area, and then rallied above it, set a new high. But look at this. We came back down to it, testing this area that initially the market got stuck underneath and going up higher. And if you can see, there is a tiny little wick on the very top of this bearish candle, which represents the highest point that you see on this chart right now, and potentially forever if everything they're saying about the government is true. I'm just kidding. That was a Siri joke and it didn't go over well in my head. It sounded funnier. But anyway, so what we've got going on here is an area where the market found support and pushed itself higher. Why does that matter? Well, it's an area where we may have orders waiting. We might have orders waiting. We might have people that didn't get their order filled. And when I say people, generally speaking, I mean institutions. A large amount, maybe iceberg orders, maybe there is a large number of people waiting to execute here. And I'm not talking about just sitting limit orders that you're going to see on a DOM. I'm talking about there might be a draw, a psychological draw, something around this location that I need to be aware of. I need to be aware of it because this area allowed the market to set the highest point that it reached on a more micro scale. It allowed it because we initially went up, did not reach the all-time high, came down, bounced off of it, and then touched the all-time high because of the 4405. Now you can continue spider webbing this out in that fractal nature, and most of us are aware that trading is fractal. So don't overthink things too much, but that simply is something that is important to me. I need to be aware of what is allowing the market to do the important events. So I mark that off. And now at this point, I'm satisfied with my 4-hour markings. It's time to work my way lower. Now, from 4 hours, once again, I don't like 3 hours, I don't like 2 hours. Once we get down to hourly, we're going to start looking at some more interesting things. On the hourly chart, we're going to start to see that these lines start spreading really far apart. And what we're doing is we're giving ourselves quadrants. We're giving ourselves areas where we can both find trades because of our higher time frame action, and we're giving ourselves areas where we can veto opportunities if we're going in the wrong direction and there's likelihood of some type of strong bounce around that location. And what I mean by that is if hypothetically I'm trading and say we are down, let's say we're down here near where we have one of our 8-hour lines, actually our only 8-hour line at the 4250. If we actually worked our way down here towards this 4250 and I was trading in on a micro view, or I was just looking at the hourly charts and I was like, oh, look at, yeah, there's some resistance that happened at 4280. And I wanted to scalp the market, take advantage of, maybe being stuck under 4280, and I wanted to short. This line would save me from probably a costly mistake, or theoretically, that's the idea. This 8-hour line at the 4250 is going to make me rethink that position at the very least. It's going to make me rethink the likelihood, or at least how long I want to keep that trade open for, because I'm not going to keep that trade open for any more than 15 or 20 pips because I'm going to be smacking into that 8-hour line. So these lines give us quadrants of which we can both find positions throughout the week as well as avoid potential mistakes. And this entire process, with me blabbing on and making horrible jokes today, my joke machine is off. It's really not taking that much time, right? So if I do this on a Sunday night or a Monday morning, and I work my way down to, say, the 30-minute chart, which is realistically where I'll stop drawing lines if I'm feeling gracious. But for the most, or well, gracious, if I'm feeling a little bit enthusiastic, I'll go all the way to the 30-minute chart and draw these lines on a Sunday. But once you get down to those short time frames, it's not really doing you any good except for the immediate term, because obviously on the 30-minute charts, the 15-minute charts, the hourly charts, that's when you're going to start seeing a lot of those lines be less impactful, but you're also going to see the market move around them more. They're going to be a lot closer to price. It's going to be a lot easier for the market to move. You're going to be moving them a lot anyway. So that's more of a in the moment adjusting process. This is more of the at the beginning of the week process that I'm trying to get across here, is marking off these higher time frame lines and adjusting if needed. And then when you go throughout your trading day, then obviously you can pay attention to that more micro scale and pay attention to your 15-minute support, your 5-minute support, your 30-minute support, your hourly, etc. But usually the hourly to 30-minute is where I will stop this process. And generally, guys, hourly's good enough for this kind of concept. But we now have ourselves our quadrants. We're good to go. So what's the next thing that I'm looking to do? Well, obviously you can't answer me yet. So the next thing I'm looking to do is be aware of what types of, what types of preventable nuisances, we'll call them. And what I mean is those nuisance news events are going to create problems or affect my trades throughout the week. And how do we do that? Well, there's a million news agencies out there. But the next thing that I want to do on my Monday morning, or really Monday morning more so than a Sunday night at this point, I want to go ahead and pull up something like Forex Factory, and shout out to Forex Factory, because you guys are have been OGs in this game for quite a while, and I've always loved your your presentation here. So Forex Factory makes this really easy. Forex Factory does a good job, in my opinion, with filtering out a lot of the less significant news events that might be moving your charts around or causing some volatility in whatever it is you're trading. As you progress throughout your trading career, you're going to learn which news events are going to impact you the most. And there are going to be news releases, depending on what you trade, that you may not find at Forex Factory. So I'm not encouraging you to only use Forex Factory. I'm more so using it as a demonstration. There are, futures releases perhaps that you may not see here that might be important. But anyway, the news releases that are on Forex Factory are going to do 95% of you out there just fine without even ever having to leave anywhere else, because these generally are the most impactful movers in the market. And we can simply look at this in a really dummy proof. And I like dummy proof, get it? So I like the fact that I can look at yellow, orange, and red, and I can say, hey, red, that's going to be an event. I can look at yellow and be like, not as concerned. And I can look at orange and say, hey, that could go one of two ways. That one might be one I want to be, concerned about. And the reason why this matters to us as traders, guys, is if you don't want to expand the details and you don't want to go in and understand exactly what is expected when the market responds, bullishly or hawkishly, it's what is it that's going to happen. If you don't want to break it down and really get into the fundamentals of all of this stuff, at the very least, what this is going to provide you with is a roadmap of potential disasters to avoid. So if I look at this and I say, okay, boom, here, 10 a.m., I know I have a high impact because we've got the CB consumer confidence coming out. If I go and say, all right, well, 10 a.m. today, I'm going to be on the lookout for activity and probably going to expect it to start ramping up, usually about 5 minutes or so before the release hits, activity hits, boom, and usually settled out. Usually that initial swing that we see, a lot of times that's settled out within 15 minutes. If that's the case, and I don't want to actually look to trade based on the news event and try to project what I expect to happen for that release, I can just avoid it. I can make sure I'm flat during that time. Or if I'm trading a higher time frame position, I can assess whether or not I'm concerned with how this might impact my trade. And what that thought process might look like is, if, for example, let's go back here to what we're currently looking at. We actually just moved a line there. So let's go back and say we're trading around our 43.80 line. Okay. We're trading around 43.80. We have this marked off as one of our levels. And I know that I've already got a long open, mind you. Let's say I've got a long open, and I know that we have a release coming in about 30 minutes time because I checked the news. I had it marked off. If I am concerned that I have a tight stop and my stop is maybe my long was executed 43.81 and my stop is somewhere down, say 43.75 or something real tight like that. If that's the case, if I'm looking to drive with my trade or jive with my trade with what's going on with the events that are happening in the market, I might want to close that position out if I'm concerned that a sudden volatility swing is just going to stop run me, even though my overall TA, my overall technical analysis might be correct. I might want to just close the position out and just take one for the team, so to speak, take whatever profit I have at that point, because once again, we haven't hit stop loss. We're going to assume we're in profit, and see if I can get in after the news calms back down, see if that opportunity is still there. If I have a stop loss anywhere near and I've got a high impact release coming out and I'm not doing analysis on what I expect that release to do to the market, 9 times out of 10, guys, I'm going to be a diligent, good little boy, and I'm going to close that position out, and I'm going to reopen it if that opportunity presents itself again. And if not, if it doesn't present itself again, guess what will? Another opportunity elsewhere. It's that simple. It's that simple. We don't have to, hope, put our head in the sand, hope for the best, and be like, oh gosh, please don't hit, and see what happens. I don't need that in my life. You probably don't need that in your life either. So if we're close, the news is coming, we're aware the news is coming, we can close the position out, reopen it, or reopen a completely different position at some point in the future. And if we haven't hit the take profit yet, and at the time that the news event has arrived, then so be it. This is something that can allow us, by taking a look at the weekly forecast and paying attention to the news releases as they are sometimes inadvertently released throughout the week. This can allow us to kind of plan accordingly and could take the news fluctuations into consideration when opening the position. These are things that should never really have to come secondhand. We shouldn't have to always respond to these things after the position is open and say, oh crud, here comes news. When all of this is, well, most of these news releases that are going to matter are going to be listed right in front of your very eyes on websites like Forex Factory, as well as a bunch of other news sites as well. So I take these things into consideration with where my stop is, as well as the degree of severity behind the particular release. And this is all that pre-plan. And if you pre-plan correctly at the beginning of the week or at the beginning of your trading day, trading becomes so much less stressful. And it's, if you're trying to wing it every single day and start every single day completely fresh, you're not really allowing yourself to continuously build this mapping of the market. You're wiping the charts clean. If you're no longer giving yourself the ability to watch the story unfold if every day is a completely blank page and you're no longer allowed to look at the page before it. So taking a look at the news and marking off your key levels, however you get to those key levels. The way that my levels, come to be does not have to be the way that your levels come to be, but if you are here, there's a good chance that you are some type of TA based trader. There's probably a good chance that you are. So however you come up with those macro levels that you want to make sure you don't get caught off guard by, come up with them. Mark them off on Sunday evening or early Monday morning. Mark them off. That way you can trade stress free. And when you trade a little bit more stress free, you're going to see an increase in your mood. You're going to see an increase in your results in general because you have taken one more stone off your back. You've got one less thing to worry about, and that does a lot. It does wonders for us as traders, guys. We have enough stones on our back as it is, right? But once we've got ourselves mapped out, once we've got the news mapped out, the next thing in line, here's the news. I actually, skipped over the slide, but right. The next thing is to pay attention to the average volatility. Okay. The average volatility, and what I'm talking about with the average volatility is take a look at how the market has been behaving. And this means you can take a look at how the market behaved during the night. That is okay. You may not be interested in trading during the night, and you may say that the activity during the day is different during the night. But folks, there is a correlation. Being aware of how active the market is at night does actually play a role in how active the market is going to behave or, be during the day. So take a look at the volatility. How far has the market gone during an active hour time span? How far is the spread from the swing high of that time span to the swing low of that time span? And what we want to do with this, sorry about that, guys. Headset has a battery saving feature, for the planet and all that good stuff. So what we want to do with that information, once we actually are aware of how likely the market is to move during an active hour window, this should go into our head, and this should be a factor that we consider when we're setting both our stop losses, but also our take profit levels. If the market is swinging on average, let's use Forex for example. The market on average is swinging in an hour. Say we're looking at the cable and it's swinging 100 pips in an hour. It's just some outlandish number. When I go to set my stop loss for a position based on an hourly chart, would it be logical for me to set that stop loss, say 10 pips, in the middle of a trading range? Probably not. Probably not. I want to make sure that just the average volatility swings that the market's having that we have no control over aren't going to work against me. And if I don't like how volatile the market is, because it unfortunately means that I need to expand my risk and my stop loss too much in order to make logical sense, or then I don't need to execute. But this goes on the opposite side of the coin as well. If I'm looking to say I'm looking to take 40 pips on a particular position, I've got a nice runner I expect coming because we broke support, or well, We just pushed above a previous area of support, regained it, and now I expect some nice bullish momentum to, to run us off. If that's the case, and I'm looking to take 40 pips, but I looked at last night's volatility. I've paid attention to the volatility as the day has progressed thus far as well. This is something that's dynamic. We're always going to be paying attention to the average volatility as we're trading. If I see that in an hour time frame, it's not likely for the market to really be able to exercise 40 pips because it's only been moving maybe 5 up or down. I'm really kind of just well wishing at that point. So being aware of the average volatility, which can be made easy with indicators like the ATR, for example, or things like the VWAP, which is the volume weighted average price, things like that, guys, allow you to get this sense of what average means in the market, and it allows you to stay based in reality. So with the VWAP, for example, guys, the VWAP is a great tool, and I think it's honestly a little underrated with things like this because with the VWAP, you actually have the ability to see where traders might be getting crushed. And what I mean by that is very oftentimes what I find when I pay attention to just simply throwing the VWAP on the chart, which guys is easy as looking at a moving average. If you notice that we're trading above the VWAP, we're trading above the VWAP and we're coming down to the VWAP, there's two things that are going to happen here. Most of the time, what we're expecting when we return to that VWAP is a bounce, which means ergo, if I combined outside logical reasoning, outside price action with what's going on around the VWAP, I very easily could justify a nice easy position or a nice easy win off of that. Or I got myself caught off track there, guys. I apologize. But if we come down to the VWAP, there's two things that are going to happen. We're going to be looking for a bounce to occur or a breakthrough. Generally speaking, the bounce occurs. So if I'm not seeing the technical analysis that I need to see in conjunction with the VWAP to substantiate that a bounce is occurring that I want to take advantage of, what the VWAP tells me is where average traders, where most retail traders are probably getting stop run if we fell below the VWAP. A lot of traders will go long at the VWAP if we're trading above it, or they'll go short at the VWAP if we're trading below it and we're rising up to it. So if I don't see what I need to see in conjunction with being around the VWAP to substantiate that a bounce is occurring or to confirm that a break is occurring, I will be aware that there's no trade that I can clearly justify because I only have one layer of, one level of instigation as to far as why I might be involved. What I can do is I can say, okay, if I'm going to stay out, but if we fall through the VWAP, now there's a good chance that we're looking to stay underneath that, and we're going to watch a lot of traders get smacked. And as sad as that may be, it can provide an opportunity for those of us paying attention and those of us that were cautious and couldn't really add those other layers of confirmation to jump on to go long. It can provide us an opportunity to now short the market and take advantage of the majority of the retail traders that are holding on to a position that they had because they went long at the VWAP, lost. And a lot of times, guys, unfortunately, people just aren't able to let things go or have a predetermined stop loss that's going to allow them to get out of the market anyway. So you can take advantage of those stop runs that happen when a VWAP push occurs. So those are things that can aid in paying attention to the average environment of the market, which is really what falls under that average volatility measurement. And this is something that's an ongoing thing. So this is something we want to be aware of before we go into the market, which is obviously going to require us, if we're doing it exactly at the open, we're going to have to look at pre-open data, but it's something that we're always going to consider. We're always going to take a look at and consider before every single execution. We want to say, how has the last hour performed? How much movement have we had in that last hour before I open this long? How am I demanding too much out of the market? Or is my stop loss kind of illogical because of how active the market is. My analysis that the market is going to go up might be correct, but I could still get stopped out and end up a loser because I didn't take into consideration the environmental details that are going on in the market by paying attention to where we are in location to averages and volatility, paying attention to things like the VWAP, and paying attention to, which segment of market activity are we in? Are we currently in a bullish phase? Are we currently in a bearish phase? This stuff all falls into this kind of average volatility, being aware of your environment settings. This is all part of the process that goes through. And even if it sounds, a bit, a bit complicated, it really isn't. This is stuff that you're going to be doing depending on which level of trading, which level or where you're at in your trading career. This is all stuff that you're going to do in time, and you're not going to really think twice about it. And I'm finding now, it's actually funny. Here's a self admission. As I'm talking about some of this stuff now, I'm actually realizing how long it's actually been since I've had to say these things. I kind of leave it to that subconscious muscle memory. And lo and behold, it actually feels weird for me. And the reason why I bring that up is because I generally don't have to devote a whole lot of brain power to marking off my levels, to checking the news, to, paying attention to the conditions. And guys, one thing that I want to make sure I add with the news, and this is a nice little tip that hopefully saves you guys some costly mistakes, which I have experienced in the past. If you're going to set alarms for when the news events are, which I strongly encourage, I mean, we like Siri is clearly always listening to me. I probably shouldn't have said her name. She's going to come out here and pop up at my doorstep. There's alarms that are just all around us just simply by speaking in this wonderful world of technology that we're living in. There's almost no excuse to get blindsided by news when you can just simply say, hey, set an alarm for 8:30 or what have you. But here's the real trick. If the news is at 8:30 and you set an alarm for, say, 8:28, so you can make sure that you're making your final decision before that event actually hits, and that's the latest you want to put it, set another alarm, set one for, maybe 8:27 and another one for 8:29, for example. Give yourself two alarms. I can't tell you how many times with news events that I allowed myself, I gave myself the time of day to look at the phone, to take a look and say, Bing, I'm going to go ahead and turn that alarm off. I've got a news event in 5 minutes. And then all of a sudden you're getting bothered by the significant other, or maybe your dog chewed a hole through the wall. And then you forget about that news event. You get blindsided by it. And there's nothing worse than getting blindsided by a news event that you had an alarm set for. So it might sound like extra work, guys, but I promise, something that's actually helped me tremendously is just doubling up on my alarms. And that, quite literally, every high impact news event that goes on throughout the trading day, you can look at my phone and you'll see Alarm City. I'll have at least two alarms for every event to remind myself. It's just like getting up in the morning. Sometimes people like to hit that snooze button, and they really are thankful that that alarm goes off again, and it's not just boom off and it's said and over with. But anyway, so aside from paying attention to the average volatility and the average dynamics in the market and taking that into consideration before you execute out your positions, the next thing, and once again, this is going to apply to looking through the window into a funded trader's mind, is be aware of the rules. So if you're in here and you have no intent of being a funded trader, you're just, trying to join me for some of my really terrible humor, then this won't apply as much to you. But for the rest of us that are funded or looking to be funded traders, there are rules that are going to be different regardless of where you trade. Okay. Obviously, I'm over at Earn to Trade. Big fan of Earn to Trade. That's why I'm there. I personally think that we have less rules than pretty much every other entity out there as far as a testing agency goes, as well as who we line you up with to get funded. But the rules still are there and we need to be aware of them. And what I'm talking about are things like your daily drawdown limits, your max drawdown limits. Perhaps you have a weekly drawdown limit. Okay. Maybe you have a drawdown limit that is going to stick to the highest point that your account reaches. And that means that, say your account has begun at $25,000 as the trading day goes, and you actually made it to $27,000, and your account falls to, say, 2,500 or 25,500 or something along those lines, but you only had $1,000 drawdown. Even though you're in the profit, you've actually been green for the day, you can still lose your account. These are things that can happen with a funded trading account. Now, the rules aren't there to trip people up. Ultimately, the logic behind having a funded trading account is to trade with someone else's money, and naturally you would expect that they want to protect their money and make sure that people aren't taking unnecessary risk and they're actually adhering to that, chug a chug, that one step at a time mentality. But whatever the rules are, wherever it is you plan on trading, whether it's at earn to trade or not, it's not going to hurt my feelings. Just make sure that you are aware of the rules, every rule that you need to adhere to. If it's, maybe you're coming to earn to trade to pass our gauntlet experience, be aware of all those rules before you begin. You can count all of them on one hand, but you need to be aware of them, because there's nothing more frustrating than thinking you're doing just fine, or if you're trading at a location that has a weekly drawdown max and you're up for the week, and that drawdown max perhaps has, once again, is tied to the highest balance that the account has achieved. It can get real finicky if you're not aware of those rules, and you can actually lose a funded trading account that you're doing well on just because you simply didn't know it. So what I recommend and what I like to do each and every day if I'm trading on the funded account, I like to pay attention to where I kind of do my math real quick, just say where, and it's obviously it's not really math. What is the lowest point my account can reach? What's the lowest point my account can go? And I'll draw a big red line at that location. That's going to represent, or I'm going to keep it on a separate screen on my Excel sheet. I'm going to pay attention to what the maximum backward slide I can withstand is. I'm going to pay attention to that. I'm going to be aware of that. That way I don't accidentally go and blow off the opportunity that I have to trade with someone else's money. Okay. So be aware of the rules wherever it is you trade. It seems like a silly one, but this is the biggest offender. And coming from a place of the funded traded world, I can tell you that this is probably the number one what's the way that we want to word this? This is the number one deal breaker that makes or breaks a successful funded trader, is just simply not paying attention to the rules. This is more of people offend this more than just trading improperly even. So it's really simple, but just be aware of where your failure lines are. Be aware of what you're actually allowed to lose and adjust accordingly. Be aware of these things. Stay within your boundaries, because as a funded trader, you do have boundaries. You have a lot of beautiful gifts, but you have boundaries. Just be aware of where they're at, and then you won't have any issues. The next thing is to execute. So as far as executions go, this is where you're going to adhere to the trading plan. Everybody has heard until they've gotten sick that we all, as traders, need a trading plan. And guys, unfortunately, those people are right. Okay. Having a trading plan does a lot for us. It allows us to have a battle action. Do you think that the US government, when they go and oh, how are we going to word this that it doesn't become political? Do you think that the governments of the world, when they are going to execute some type of military event in any fashion, do you think that they're just going in and they're like, yeah, we'll figure it out, we'll take it as it goes? Absolutely not. They have backups to the backups to the backups to the backups. They have, what are we going to do if this happens? This is what we're going to do. This is who we're going to tell. This is exactly how we're going to respond. All of that stuff is planned out. It's planned out because by having a plan, it takes away the most dangerous thing that we as humans have while we're trading, and that's emotions. You want to remove your emotions as best you can. It's the trading plan makes it so much less stressful. And this kind of goes back to what we were talking about in the very beginning of doing that pre-planning phase, and how it kind of takes some rocks off of our back. Why you have rocks there, I don't know. But the trading plan says, if this is present, then we're going to look to do this. That's the concept of a trading plan. It gives us the rules of engagement. It gives us something that we can follow more as a soldier. instead of trying to be a free bird in the moment, which then makes it very hard to dissect if we are a free bird in the moment. It's a very hard time to improve or analyze our data if we're constantly changing what we're doing, if we're constantly introducing all these weird variables into the equation. It gets really, really hard. And guys, I don't know if you're anything like me, but I don't like math. I don't. It's not my thing, guys. I don't like it. So if there's a way for me to reduce having to make the math harder when analyzing my own data, when analyzing what's helping me and what's hurting me, I'm going to do it. And the easiest thing of all is just to predefine what you're going to need present in order to execute. Emphasis of a trading plan. Not only does the trading plan allow us to get into the market, but it'll also keep us grounded when we have trades that are not going our way. When we have trades that are not going our way, it gives us a way to get out of the market with a predetermined amount of loss, which you wouldn't think it, but that is a wonderful feeling when you save yourself a limited you save yourself a blown account simply because your trading plan made the hard decision for you that you're either done for the day because you've hit maybe 3 or 4 losses if that's part of your trading plan, or you're done for the day because you've lost a certain percentage, or you can be frustrated about it and you can be angry about it and you can express those emotions, and it will still feel good at the end of the day because you know that you're doing the right thing, which once again subconsciously that does wonders for your progression as a trader. So when we execute, it's important to stick to whatever predetermined plan that we've set forth for ourselves. That's extremely important. The next thing that we've got going on here is respond accordingly, and this was we were kind of overlapping into this a little bit when I said if a trade isn't going correctly. This is huge for me personally. So I'm somebody, like I said at the very beginning of this discussion, I'm somebody that's quirky. I'm somebody that's a little bit out of the box with the way that I speak sometimes, with the way that I communicate, with the way that I teach. I like to do things kind of a little bit, a little bit different. And that's helped me in my career. It's allowed me to achieve things that other people told me I wasn't going to be able to achieve. But it also has caused problems for me. And some of the problems that it's caused for me in the beginning were getting the emotions under control. I was someone that in the very beginning of my, trading path, I was very susceptible to those emotional swings where when I was doing well, man, I was punching holes in the wall. I'm not literally, guys, but I was pumped. I was like, yes, this is good. This feels great. Yeah. But when I was someone that lost, I was the guy that was, ready to jump out the damn window. And it's like none of this stuff is good for the overall goal that you have in mind. So, what you need to do, or at least what I did, I can tell you what I did. I had to analyze myself and say, what can I do to, you guys like the pinky? Maybe I'll do the index finger. So, what can I do to minimize the impact that these negative emotions are having on my ability to get to where I want to go? Okay. So for me, I'm somebody that responds very well to physical activity. That's just who I am. So if I have a day, so this is quite literally part of my trading plan, and I'm not kidding you. If I lose 3 trades, if I lose 3 trades in a row, I have to go for a run. And that sounds maybe not what you're looking to do, but it doesn't need to be what you're looking to do because you're not me. But you do need to figure out what you're going to respond best to. What is the best way that you can stop the negative emotions, or that snowballing feeling from a position going against you, or from positive tilt, from feeling like you're untouchable? What's the quickest way to curb those things and get back to a smooth baseline? For me, physical activity helps tremendously. So that means I can go for a run, or, I was talking with Shane before we got going today. I just recently hit the gym. Today was not a great day for me for trading. You know how I curbed that? I went to the gym, and guess what? My account's just fine. My account's just fine. It'll be there tomorrow. I feel good. I'm satisfied that I listened to myself. I can find satisfaction that I did what I told myself that I would do when those conditions presented themselves. I can find satisfaction in that. And because I can find satisfaction on that, I can move on. So that's how I can respond accordingly to whatever's happening to me, whether it's, whether it's, once again, positive or negative, it doesn't matter. I'm not going to beat a dead horse on it. But the point is, dissect who you are and dissect what you respond well to, and have a way to allow yourself, and don't be one of those macho guys or girls out there, or whatever. I don't, whatever you identify, I don't, whatever it is, don't be one of those rah rah alphas that, oh, I'm impervious. Just because your face doesn't change while you're staring at the screen doesn't mean you're impervious, guys. All of us know that we can have those, those internal effects, or at least we should be aware that those internal effects of that, those negative triggers, those negative emotions that are caused by trading, we're all susceptible to that, guys. And if you're not, then you probably should be best friends with Ted Bundy or something. There's something going on, and I'm not going to be able to help you with that one. But the point is, analyze who you are, figure out what you can do and what facets you can, allow yourself to express those emotions, both positive and negative, as a response mechanism to what is, what you're experiencing throughout your trading day. If you find what works for you, the quicker you can get back to a healthy, true baseline, not lying to yourself baseline, the better off you're going to be, the quicker you can take your next step. And what is a trading journey? It's one step at a time. It's one step at a time. It's going to take a while. You're going to have good days, you're going to have bad days. Like I said, I had a bad day today, but but how do I measure a bad day? Because really, right now, I'm having a good day. I'm talking to everybody out here. Maybe one of you will benefit from, my insane ramblings, and then I did something good. I adhered to my trading plan. I can feel proud of myself for that. I gave you guys complete transparency behind how my brain operates and what I do and what allows me to actually be profitable. And that's something that I know most traders statistically can't say. And so it's like, one thing at a time, one step at a time, do your very best, and don't put unrealistic expectations on yourself for these illogical numbers that you have to hit by a certain date. Because guess what, guys? The market doesn't care about your numbers. The market doesn't care. It doesn't. It doesn't. Control what you can control, let go of what you can't. You didn't know you were walking into an AA meeting, did you? It just, guys, respond accordingly, be a human, laugh a little, and beyond that, that is, here comes my thoughts, right? The thoughts are already here. I've been here the entire time. The as far as trading goes, I am a technical analysis based trader. I like analyzing key levels. Okay. My secrets, if you've made it this far, I like paying attention to what allowed the market to get somewhere. The majority of the trades that I take that treat me well, that have allowed me to get to where I am in my trading career, aren't because I wrote some incredibly complicated trading algorithm. It's not because of that. It's because I got good at understanding what the market needs in order to achieve other things and how the market responds when it returns to those levels. That's what works for me. You might have strategies out there that probably baffle me. I'm not the smartest man alive, but I have found things that work, and I look to share those things with you guys. So that's what I've got to share today. It's one step at a time, guys. Do what works. Understand that it's okay if something doesn't work. Just look for whatever that next step is to keep you moving in the right direction, not the wrong direction. I didn't know if you were going to jump on there or not, Shane. I saw you bop on there.
Yeah, man. I'm actually kind of piling through the Q&A list here.
Oh God, it's probably insane.
Yeah, it's all over the place. Hey, so one question that somebody had. Oh, guys, by the way, now's the time if you want to do some Q&A. Go ahead and type your stuff into the box. Uh, there one's question here that asks if you only trade futures, but I have a pretty strong feeling that you do more than just indices and that sort of thing. You probably do some forex and that sort of thing. Is that right?
That is correct. Yep.
All right, and then that kind of leads into a question that I had. As far when you're trading forex, a lot of times you're talking about a mean reverting instrument, something that's going to move back within. There's a lot of back and forth, not always pushing all-time highs and that sort of thing. But when you're looking at ES and NQ and that sort of thing, how do you approach a market like that differently than you would say, 6A or 6E or whatever?
Hey, that's a great question. You know, that the short answer is I don't treat it any differently. The short answer is I actually treat them the same. What I look to do is I look to put the market into a box and I look to put it in quadrants. So as far as the exact opens and closings, there are strategies that kind of revolve around, and there's ways that we can go about taking advantage of the differences and the nuances between separate market, obviously. But as far as the concept of putting the market in a, I think I just broke my keyboard. But as far as the nuances that go into putting the market into a box, you can still do it exactly the same. Price is there. Where has it been when it was at its highest point? What allowed it to get to its highest point? The market, something that I've found. I'm a trader that began in forex. I went through the processes of, or the processes, or however you want to word it, of understanding how I was going to get the correlational ties between the New Zealand dollar, between the Kiwi and even with the one-offs with say the pound, and when a news release happens in New Zealand, how can I take advantage of this? Guys, there's all that you can take advantage of the weird nuances, but at the end of the day, what ultimately actually worked for me is breaking it down into the most simplistic sense and saying, this is where price currently is. This is what allowed it to get there. And regardless of whether I'm looking at crude oil, whether I'm looking at Forex, whether I'm looking at the E-mini S&P 500 or any other index out there, all of those things are still present. So everything that I just talked about can be applied to any of that. It doesn't change.
Roger that. So then, are you typically an RTH trader, or do you wait? Do you
Yes,
start before regular trading hours? But
absolutely. Yeah, no, yeah, I'll save you on that one. Yes, RTH for me all the way. Now, if you want to trade ETH, guys, you want to extended trading hours. If you want to trade during those hours, you want to trade, overnight. By all means, be my guest. It might be something that works better for you. I find a lot less success myself trading those hours for a few reasons. I find that the volume and the volatility itself does not agree with my particular trading styles. I don't get enough movement, generally speaking, to my take profit levels. That just happens an awful lot where I'll be right about my analysis on where something's going, but it's going to take, 2-3 hours to get there instead of something that might take 15 to 30 minutes during RTH hours, but the other things you need to be aware of if you are interested in trading those weird trading hours, be aware of what it's going to cost you to hold. And that's something that, guys, you can find these answers, that type of stuff you're going to find with Google, or you're going to find with what's, you may not even be allowed, because once again, we talked about what I go through as a funded trader, trading with someone else's money. A lot of firms out there won't allow you to hold overnight. Some will, some won't. Once again, it remains to be seen. But there's good reasons as to why a lot of them don't want you to be holding overnight as well. But anyway.
so are you an opening bell kind of guy? You come out just dukes up, or do you like to kick
Absolutely.
back a little bit, or wait to see what happens for half an hour?
I Okay. I probably said absolutely a little too soon. Am I there, Dukes up, ready to go? Absolutely. So I do generally, I said I try not to get too crazy looking at the market on Sunday evening. But the reason I look at the market and do my homework on Sunday evening is in case something is presenting itself. And that I like, that's generally going to be a higher time frame, that I'm not concerned about the opening bell causing enough irregular volatility or enough exaggeration to affect. And what I mean by that is, if I have a monthly level that I've been waiting to execute on, or something that I'm looking to take advantage on, and it happens to finally come during the opening bell, you bet your bottom dollar I'm going to be taking advantage of that, even if it's the very open or not, because my analysis is superior. Well, it comes from a larger pool than just today. It comes from a larger pool than just today's opening, or even or this week's activity. If I'm looking at something that's much more macro than what's going on in the short term, I won't allow the open to deter me from that analysis. But I'm not going to be trying to scalp. I don't try to scalp the open moves. I'm not one of those guys that's out here looking to take advantage of, a 15-minute scalp or something right off the opening swing, or take advantage of any of those like follow through swings where it's like, if it goes up, you grab the top of the swing and take advantage of that range or breakout or any, none of that stuff.
Cool. And a lot of what you covered here, as far as putting your levels on, VWAP, that sort of thing, you're encouraging people to build context.
Absolutely. Yes. That's the much more clear and probably intelligent way I should have worded that. So I'll take that one from your book. Yeah. Context is everything. I think I described it as the environment. Pay attention to the environment of the market and pay attention to the conditions. But yeah, context is everything. As soon as you do the pre-plan, as soon as you do you've got your levels marked off, as soon as you're aware and you have your alarms, your double alarms, hopefully you got your double alarms for all your high impact news events and maybe even your medium impact news events. Once you have all that stuff out of the window, it's a whole lot less stuff that you have to keep up here, guys. And I'm not a supercomputer. There's only a limited amount of space up here. So I need to keep up the most valuable things up here. And that means I need to not clutter it up with all the stuff that I can rely on either pen and paper or technology to help me with. And when you build that context, you get that kind of, you get the conditions. It's like being a weatherman and saying, okay, we don't know for certain that it's going to rain today. We don't know for certain that it's going to be bearish, but the conditions are definitely present. And I can go into my trading day being aware of that, and I can keep that and say, okay, well, if I'm going long, but the conditions have, are are pretty conducive for some bearish activity, maybe I'll respond to that by adjusting my expectations for long positions by cutting everything in half. Instead of say, maybe going for 20 points or something, maybe I'm looking to just grab 10 today if I decide to go long. Whereas if I look to go for a 20-point trade, or maybe I look to open 3 or 4 contracts, it's only going to happen if I'm going short or what have you. But
yeah, fine balance between the trees and the forest, for sure. And every trader has to come to that themselves. They have to form their own opinion as far as what they're seeing. Nobody can lay it out for you.
Exactly. Yeah. Yes. Yes. What I say is not going to make sense to everybody. There might be some people that are like-minded like me, where it really, really clicks and that light bulb goes on. And I can only hope that that happened for at least one person. But ultimately, guys, like the one piece of advice that I think is kind of that language everyone can understand is, look inside and find out what you seem to have a natural affinity to understand when you're trying to interpret what's going on in the market. When you're trying to interpret these conditions, find what speaks to you in a way that you actually understand it. If it seems like a foreign language, you probably need to go another route.
Absolutely. All right, let's see what we got here. Opus One, let's see, says VWAP discussion. Was it mainly for Forex or stock futures or individual stocks? You can use VWAP on just about anything, but I'm going to let you delve into that.
Yeah, absolutely. So guys, VWAP stands for volume weighted average price. And essentially you can think of VWAP, if we really want to simple it down, just think of it as a moving average that's trying to put a line through the average price of an asset, whatever it is that you're analyzing. So can you use it for stock futures or Forex futures or whatever it is, whatever the answer is, guys, you can probably throw a VWAP on it and gain value in it. A lot of times it just simply gives you a dynamic centralized location. Kind of think of it as a POC, like a point of control that the market's got. And it gives you, think of it as like the center point of a seesaw. When you're above the VWAP, You're obviously experiencing some bullish activity, and there's always an expected mean reversion where at some point or another price does need to revert to the line. They're going to intersect and they're going to flip hands. So you want to keep that in your mind regardless of what asset you're using a view up on. But as far as what you can use it on, knowing an average of anything when you're looking at something from a price action and a technical analysis standpoint, being aware of where that middle actually is, because it might not be where you think it is pretty valuable in my opinion. But once again, maybe it doesn't click for some people the same way as it clicks for me.
Yep, true that. True that. Let's see. H. Latham. If price is getting close to your level, we just take the trade, or you're looking at order flow, et cetera, to confirm.
Okay, so I'm not going to go off on a tangent about the order flow, so I'm going to be careful how I answer this. So let's see. If price is getting close to a level, oh, where did it go? I lost it. Oh well. So it was I lost my question. It was prices getting close to a level. Do I abandon it if news is coming? Was that what it was?
Yeah, I
Oh,
should
oh,
pop
I see
back
it.
on there.
There it is. I see it there. Okay. If price is getting close to your level, will you just take the trade, or are you looking at order flow to confirm? Okay. So I am someone who's sparing with order flow, and that is part of this question. I don't want to go too much into detail as to why I'm sparing with order flow, but if you're looking for the short answer, it does have to do with the term that I used during this presentation called icebergs. There is order spoofing, and that can bias you one way or the other. Now, I'm not by any means knocking order flow. There are a lot of phenomenal order flow traders that swear by it. I'm not one that swears by it myself. It's not one that has helped me personally. That's all I can add in that regard. It doesn't mean it might not help you. So I want to be careful how I word that. And I mean that, guys. But if it's getting to the level, the first thing that I need to see is whatever my particular reason for execution that I have in my trading plan. Okay, without giving you guys direct trading advice, whatever the reason behind why I want to take a long, I still need to see all those layers of confirmation met. I don't just jump into a trade simply because we're approaching, say, one of those key levels. So, like we marked off in the beginning, a lot of those key levels that I marked off in the beginning, those are areas where I most likely will be executing. That's just the stone cold truth. So those areas you saw me mark off today, those are areas where I most likely will be executing, but I won't be executing necessarily the first time we approach one of those levels. And I may not be executing just in the fashion of looking for a long just because we're coming down to a support. I might be more keen to allow it to break and actually look to ride the momentum through. So I like to see confirmation before I execute anything. The level is just you've got the deer in the crosshairs, or if that's appropriate. But you're not pulling the trigger until you've got a clear shot. That's a weird analogy, but hopefully
No,
it
it
makes
makes
sense.
sense. It makes total sense. I mean, and everybody's confirmation is going to be different. You know,
Exactly.
I think it's probably ill-advised to just blindly take trades based on a level without looking to see how the market is responding at that level and whether that coincides with your trade management, your trade plan.
Absolutely. Yeah, absolutely. Yep. Yeah, exactly. Yeah. So it's confirmation is key, guys. The more layers of confirmation you have, generally, the better off you're going to be. But that's where your data tables and your Excel sheets on your end are going to help you out to be able to analyze whether or not you know, you're on the right track or you're on the wrong track, or you need to adjust accordingly.
Sure. Hey, have a look over that list, see if there's anything you want to tackle, man.
All right, let's see here. Okay, this is a good one. Yeah, I mean, there's quite a few. We've got a lot. Those of you that were saying thank you, guys, I appreciate that. So I'll address that right away. If you're one of the ones that are saying, I see a lot of kind messages, so thank you. The ones that are saying there are several funded websites. How do you cut out the noise? That's a great question, and I need to preface that, by providing the information as real as it gets, guys. I am affiliated with Earn to Trade. And as Earn to Trade, what we do, we provide education for traders to get them to the point that they can pass an examination where they're then offered from a prop firm the funding. So in a way, I am technically biased. I'm just prefacing it right off the bat. But let me tell you this, as straight as an arrow as I can be, I'm at Earn to Trade because I like Earn to Trade, and it's one of the only actual regulated firms out there with the way that they pass the examination. You don't have to take my word for it, guys. They went through the they went through the gamut with making sure everything was done completely correctly by the CFTC standards and SEC standards. And once again, you can do your own research. You don't have to take my word for that. So if you're looking and you're trying to decide if someone's real or someone's not, that's a good place to start looking. Call up the SEC or call up the CFTC and see what they have to say about the location that you're actually looking to trade. Are they, what are they? You might find some information that you don't want to hear, or maybe you find some information you do want to hear. Other than that, reviews do go a long way. It's the same as anything, just like buying something on Amazon. There's got to be some bullshit along the way. You're going to see some bullshit reviews. You're going to see some people bashing people that maybe is just a competitor acting as them. You're going to see some people bluffing things up, once again, because maybe they're trying to bluff up their own thing, and it may not be accurate. Try to just take it all with the sense of generalities, and which one speaks to how you think you're going to want to trade. You need to take into consideration the rules that you're going to have to follow, because it doesn't mean anything if you go and get funded at a firm, but then you find out that one of their rules completely kills your trading plan to begin with, because maybe the drawdown is just entirely too tight, or the way it operates, or what it's calculated, or anything along those lines. So number one, do your research about the ethical nature of where you're looking to spend your potentially money and time. And then also number two, make sure that you have a trading style and a trading style that fits the rule base of wherever it is that you're going. That's really the most important things. Reviews obviously matter, but those are probably the two most important things, with the third thing being the review.
Right on. Zoba, does news affect indices? Absolutely.
Absolutely. Yeah, thank you. Yeah, Shane. Yeah, absolutely, guys.
Yes.
Yes, the news affects the indices. Now, those of you that are my Forex traders out there, it's not going to impact it. In some of the releases don't impact the indices as much. But once again, that's a loaded question, because there are certain things that are impacted more and there's certain things that are impacted less. It's up to you as a trader to decide what you're interested in trading, and begin that process. Just simply type in Google, if I'm looking to trade the E-mini S&P 500, what are the main releases that I need to be aware of? Maybe I need to pay attention to the CPI. You know what I mean? Like, find what is expected to impact whatever it is you're interested in trading. That's the beginning process for that.
Absolutely. Absolutely. And just definitely something you need to be aware of. Okay, I got one more here for you. What advice would you have for someone who's having difficulty making the switch from sim to live?
Oh, okay. I'm sorry. I think I actually lagged there for a second. That was strange. So, what advice would I have for someone that's switching from sim to live? Correct? Is that the
Or maybe
question?
having difficulty with that process?
Okay, you got to start small. That's the main piece of advice I always provide to everybody that's in that process, and I was one of those people as well. And this, guys, you might be able to relate. If you're one of those traders that you're trading on a sim account and you do well, and you've got a system where you can prove that you are across a large span of trades achieving consistent results, but then all of a sudden every time you go live you fail. The best process around that would be to jump into something like the micros. Jump into something where your monetary investment, when you actually do go from sim to live, is absolutely as small as possible. But this is also where the funded trading world might help you as well. The reason I personally like trading on a funded account is because it does remove some of those psychological negative triggers for me, because I'm not trading. It's almost like a step between
Right.
trading live in the sim account. So start with baby steps. Start where the money or the monetary risk is so small that it's not impacting your trading, or it's in the absolute smallest way possible, and then continuously increase, maybe 1 week at a time. Before you know it, you'll have that healthy detachment, and you should be good to go. If you're trading correctly, if you have an actual system that is working, you're not just lying to yourself, then that will work.
Solid advice, my man. I appreciate it. Hey, Chris, thank you again for being here with us today and sharing your expertise. Really appreciate it.
Absolutely. Thanks for having me, and having hopefully a giggle or two with me, guys. I appreciate it, and best of luck in the markets, guys. It's about to get wild with what we've got going on overseas. So keep your head down and do your homework.
Excellent. All right, folks, that is a wrap. Don't forget to subscribe to our YouTube channel. Hit those like buttons while you're there, please. And follow us on Twitter at FuturesIO. Again, I thank you for joining us. Trade like you mean it.